So this is Chase McWhorter, Managing Director with Institution Real Estate Inc. I'm with Ben Weinberg. Um, Ben, I wanted to let you kick it off. Tell us about yourself and your firm, and then we'll jump into some more granular questions. But to just kick us off, introduce yourself. Tell us a bit about the firm.
Sure. Um, so I'm a co-founder and co-CEO of a firm called Caspeak Holdings. We have one thing that we focus on and one thing that we do, which is we acquire, renovate, and reposition hotels and resorts in what we call iconic outdoor destinations. So that's national park gateway towns, beach towns, lake towns, ski resorts all across the United States. These are markets where millions of people are going today, where you can't build hotels anymore, and people are looking for a four-star product they can't find, and we deliver that four-star product. Typically buying assets that need a little bit of improvement,
Yeah.
and we kind of take them to that next level and deliver that four-star product that we found both through anecdotally, but more importantly through data that people are looking for but can't find today in national parks, lake towns, beach towns all across the United States.
So, I warned you before we'd go off script, but follow-up question is why did you and your co-founder decide to pursue this outdoor adventure hospitality? So maybe you could do that, and then just curious how much since even something like COVID, I know we've talked about this even before at our editorial board meetings, just the way people reevaluated hospitality in general. So maybe go to why you and your co-founder decided to pursue it, and then if you pivoted at all or thought about it differently with COVID and people wanting to get in RVs more.
Yeah. Listen, I think I'll kind of hit both parts. I think with any business, with any investment firm, you have to balance having conviction in your strategy based on data, but also moving quickly when the data is changing your view of the truth and reality and where the world is going, what's actually happening. And COVID, I think, did some good and some bad there because everyone was reassessing what they were doing and why they were doing it. I think that created a lot of really positive movements and shifts in behavior and trends. Through COVID, we changed nothing.
Okay.
We stuck with exactly where we thought the world was going and what we saw during COVID and what we were expecting to happen a little bit and happen a little bit more than that, was that there was some things that were happening with our consumer and our guests and that four-star product that were going to push people to these markets to spend more time there and dig deeper into their pockets than we expected to do it. To jump back, I'll jump back to the time, both my co-founder and I started our careers at Goldman Sachs here in New York. My business partner went to Stanford Business School and then started a handful of businesses in kind of the real estate hospitality operating world.
Okay.
And then I went out to a firm called TBG, which then turned into Sixth Street. But
Okay.
I'll just say from our perspective, when we decided to partner and launch this, we were focused on real estate and hospitality. But I'll kind of describe it to you as we were looking at it then before we started the business.
Okay.
We saw an opportunity to do something that a lot of institutions and endowments and families have done over time in real estate, which is own very high quality real estate in markets with very high barriers to entry with reliably growing demand that really isn't going away.
Yeah.
And we saw an opportunity to do that in markets that had typically been overlooked. So I'll give Estes Park as an example, or Wrightsville Beach as an example. Estes Park is gateway town to Rocky Mountain National Park, primarily Best Western and Comfort Inn product.
Yeah.
And then some kind of other scattered product as well. Wrightsville Beach, you have 6 million people driving across the bridge every year. There's 2 hotels, there's us and a Holiday Inn resort. And so you've got this astronomical supply demand mismatch where the
Yeah.
supply is largely fixed, non-institutionally operated and low quality. And you've got demand that has grown massively in the 10 years leading up to COVID and then through COVID. And we expect we'll continue to do that at a modest rate for the foreseeable future over the course of the next 25 years as we think about it. And so when we saw that opportunity set and we saw that in these towns, most people were not paying a ton of attention primarily because most real estate capital is drawn to these locations through local talent, and the
Yeah.
local talent in these markets, just a small amount of people, a very small amount of people live in these markets, and are drawing capital to those markets. It's just easier when you've got hundreds of thousands of people trying to draw real estate or considering drawing real estate capital to markets versus hundreds of people.
Yeah. Well, and I know again we've talked before, but I can't help but think about how hard it is in some of these towns and personal backstory, having lived in the Roaring Fork Valley, Aspen being the main town. I mean, just the barriers to entry in that market from a pure real estate investment perspective, some of these towns being just incredibly hard to even access to pencil out any sort of return. You can see why, yeah, families would go in and just want to have consider it just a piece of gold in the valley, versus actually looking as an investment. So who would you say is active in this space? Jenny, referencing Comfort Inn, Holiday Inn, like those kind of groups. But as far as from the investment perspective or other hotels, I mean, who do you see is active in this space? And then maybe some differences between these groups.
Sure. So I'll take a minute to describe what we do, which is that we have two companies. We have Caspeak, which is an investment firm, an investment platform that raises capital and deploys capital and acquires, renovates, and repositions hotels. That includes our investment team, and then we have a development and construction team who oversees any renovations that we do. Trevorn is our outdoor adventure brand that operates and brands each of these properties. We control the full stack. We're vertically integrated. We think that's extremely important in hospitality to generate alpha and generate results. There's no one in our space today who does all the things I just mentioned, but there are people who buy hotels and drive to leisure outdoor destinations. There are people who, have brands that, exist in these areas. Building these operating companies is costly and painful, but in our view, worth it and creates an enormous amount of value. But the folks who are playing in this space on the real estate side, investment firms in a small way, have been doing this for a long time. The resort asset class and the opportunity for value creation in resorts has been around for a long time. On the brand side, you're starting to see some of the larger brands kind of tap into it. AutoCamp as an example, Under Canvas as an example, not really competitive with our product. We're more traditional hospitality. But there's kind of players on both sides, on both the real estate side and the brand side.
So it's mainly been, as far as the real estate, the investment side, the main other groups in this space would just be general hospitality, that it's a sleeve of investing in hotels in New York, Chicago, Miami, and then we do some of these kind of outdoor adventure type hotels as well. Is that a fair assessment? Is it's more just a piece of a real estate portfolio, not just focused on that outdoor hospitality?
Correct. Exactly.
Okay. All right. Just wanted to clarify that. So I guess taking a step further down, getting a little bit more micro. So what are the biggest risks to this type of investing? You've been doing it for a while. I'm sure you've seen stuff. You talked about vertically integrated being necessary. I mean, what would you say are the biggest risks for this type of investing in the outdoor adventure hospitality? And then naturally, obviously, where would the opportunities be?
Yeah, listen, I think that I'll start with the opportunities and then I'll dive deep into the risks. On the opportunities, as I said, the opportunity to own real estate in markets where it's very, very difficult to add new supply, if not impossible, and demand is growing and is shown to be very steady in difficult and volatile economic times is a very, very unique opportunity set. When we first assessed this opportunity set, we didn't even put it in the hospitality bucket. We were just looking at, saying, how does this compare? And this is compelling for us to launch this platform, put our entire careers and all our capital behind this platform relative to, other real estate asset classes. And that pattern that we saw as it relates to the demand and the supply was incredibly unique. And if you can build a platform, what we like to say, build a platform to do something well that's hard to do, which is find these and buy them, finance them, operate them, you can create value from an unlevered value perspective. And obviously from the time that we started to now, the interest rate environment has changed and then changed again and then changed again. You know, it it has been our focus from the beginning to dedicate ourselves to unlevered value creation. Rates will come up, rates will come down. You know, the assets that we're buying and the yields that we're buying at happen to be in a position where, you know, you can absorb a lot of the interest rate. It certainly impacts us. It certainly hurts us just like everyone else, but we're not in
Yeah.
that kind of negative leverage position. Um, but you know, that opportunity set to be able to do that is incredibly powerful and is much more scalable than people realize. On the risk side, you know, listen, I just mentioned interest rates. Interest rates impact cash flow for everyone, including us. As I said, our yields can kind of withstand that a bit better. But
Yeah.
you know, to to me, in any remotely operational real estate asset class, you are living and executing under a microscope because of the way that the real estate capital markets are set up, which you know well, Chase, that
Yeah.
when you're talking about the cash flow multiples, the cap rates that we talk about, you know, small movements in operating cash flows have enormous impacts on value. And
Yeah.
so when, you know, I was down on property in Wrightsville Beach yesterday, and, you know, I'm in the kitchen, I'm talking to housekeepers. I'm doing that because I like it, and I think it's important to build a business of quality, but I'm
Yeah.
also doing it because that drives results and drives RevPAR and drives bottom line and ultimately drives cash flow and value. And
Mhm.
so I think the risk is that I'm referring to here is just operating hotels is hard. It is not rocket science, but it's just a lot of moving pieces, and you got to make sure you're organized, that you're precise, and you've got a militaristic execution to it to deliver guests exactly what they expect and exactly what they want, at a price where they, you know, they feel like they're getting some value. So it is not something that you or anyone else couldn't figure out. You certainly could. It's just a ton of moving pieces and difficult to execute. And what we've seen in hospitality over time is that not everyone's able to do that,
Yeah.
because of the difficulty of it. I would say generally zooming out, you know, my view is that in hospitality, the way you can really get in trouble is new supply and capex. So,
Yeah.
you know, you're sitting there with a courtyard and someone comes in with a new product that's better than yours, and you can really damage your ability to generate cash flow and generate RevPAR. And then the second is if you buy a building that you don't understand and the amount of capex and maintenance you got to put into it is much more significant than you ever expected. In the niche that we're focused on, that there is no new supply, but we're buying buildings where you really have to understand what you're buying. And, you know, over time, you kind of pick up patterns and know where to look, but there's never a shortage of surprises in real estate and construction developments. You just got to be really, really careful and be very upfront, I think, importantly, with sellers to say, this is the way that we do business. We're very thorough and we like
Yeah.
to know what we're buying. And so we're gonna have to spend a little bit of extra time. We're reasonable people, we're good buyers. But we're just gonna have to take a little bit of extra time to make sure, and we're willing to spend the money to do it, to make sure that we actually understand what we're buying.
Is uh is there an aspect of when you look at kind of the outdoor adventure hospitality, maybe drilling back down a little bit more and to understand this space a little bit more, because in I'd say broadly the real estate world, you see kind of like the resorts like golf destinations. You see on the other spectrum like KOA campgrounds, people that are in
Mhm.
RVs, like those kind of things.
Yep.
So, and then obviously you have like big city hotels and that people go to New York for vacation. So across the spectrum of kind of hospitality, where people use their leisure time, what they're doing,
Hmm.
where would you say this kind of outdoor adventure, like what is the demographic, I guess? Is it, are you seeing families? Is it, yeah, single people in New York that just want to escape and go camp out for a week? I'm just curious as far as kind of what you're seeing as far as the tenants. Is it family vacations where they're wanting to get outdoors that they don't want to be in an RV at a KOA? Because I've been in a KOA and sometimes they're not that great.
Yep.
So
Yeah.
that's kind of curious, like the demographic and maybe even the mindset of kind of what they're looking to gain. Is it they're wanting to go out there and hike and boat and do things like that versus just sightsee or completely just sit on a beach and do nothing?
Yeah, it's I'll kind of talk about the different buckets that we have. Unfortunately, just given the scale and the magnitude of these
Yeah.
destinations, widely appreciated. There's a little bit of diversity, but I think, listen, for any business, real estate and non-real estate, you have to know exactly who your customer is. So we'll kind of start diving
Yeah.
into it. I would simplify it in sort of three categories across age groups. One is retirees
Okay.
who are able to spend more dollars and more time seeing the country in areas that they've seen or want to see, and are staying for, a little bit longer periods of time, typically, closer to 5 days, and are really looking for a product that is comfortable, is clean, is modern, and is, a step above a lot of the product that exists that we talk about in these markets. So that's, I would say, the first bucket. The second is young families.
Yeah.
That's you and I, so I want to take my wife and son and daughter to go to Rocky Mountain National Park. I don't want to stay in the Best Western Comfort Inn. I want to stay in Trouble in Rocky Mountains. It's modern, it's thoughtful, it's designed forward, and it's kind of that boutique 4-star experience.
Okay.
Um, the third bucket is kind of younger single folks, younger couples.
Okay.
Think of the 28-year-old couple living in Denver, want to get away for the weekend. Rocky Mountain National Park is 400,000 most beautiful national park acres in the country. So, they're saying we want to get up there, and we are a young lawyer, a young doctor, and have the dollars to spend on a 4-star product versus kind of a 2 or 3-star product. But
Okay.
those are kind of our main customer buckets. I think it's important to note that those customers want a comprehensive hospitality experience. They don't just
Yeah.
want a room, and they're looking for more, and they're telling us that constantly. So what they want is they want the Spotify plays that we create that you can listen to, driving up to Rocky Mountains. They want the 3 places to stop that you didn't know about on the way. It's Colorado Cherry Pie. That's about 20 minutes out from Estes Park. They want that stuff, or at least they want to know that it's there.
Yeah.
In some cases they're using it, in some cases they're not, but they want that comprehensive hospitality experience, and they want that email to say, we have 15 experiences you can book. You can go, night sky pack rafting. You can go ice fishing. You can go hiking. Here are guides to do that with, and you can book that through our website. People are looking for that comprehensive hospitality experience,
Yeah.
and we're very focused on delivering that.
Interesting. Yeah. If from a personal perspective, I I'm personally done, I think, with KOAs. So that's kind of why I'm asking, like, who's there, because I don't want to be in another tent or RV for a while. So no, but I do appreciate you taking the time. No, I do find this fascinating. Just again, especially I kind of started out with COVID. Just I'm just curious how that's kind of reshaped the way people think about just doing the traditional vacation. I mean, I remember being a kid, it was you wanted to go to see the sights at Washington, D.C., things like that.
Mm-hmm.
Obviously, people always wanted to get out to nature, but it's just interesting how it's maybe becoming more institutionalized and kind of
Yeah,
giving that better experience than just a dumpy hotel, motel at the edge of the park that, yeah,
Yeah, I think that there's a couple things that we've seen that haven't changed. There's a couple things that we've seen that have really started to emerge. The things that haven't changed is for the most part, people's favorite memories, experiences, and the hospitality spaces they're in are not in luxury spaces. It's not the 5-star hotel that drives that memory and drives that experience. It's about getting people to the right place with the right people, and sitting out back and having a s'more and a beer. That's what people remember, and that really has never changed. That's always been the case and will continue to be the case. And part of why we're such believers in a leaner labor model, kind of 4-star product. And the second thing that has changed is that people just want to get out and they want to go
yeah,
and do it, and they're typically happy when they do. I think the things that have changed through COVID is that the data is telling us that people are willing and interested in spending so much more than they used to on experiences versus material things. And it's been happening for quite some time. But people are searching out those experiences. And by the way, that might be going out to a great dinner at a great restaurant that just opened up. That might be going to a national park, but that's where people are focused on spending their disposable income. And even if their disposable income is either flattening or the prospects for it rising are a little bit lower probability than they were before, they still want to spend on those experiences, and they want to do it badly.
yeah,
The second thing that's changed is that most people are not in the office for 5 days anymore, which
yeah,
opens up typically one or more additional nights for the hospitality industry, which is a great thing for hospitality, but particularly, in our markets where people will say, I'll leave work at the end of the day on a Thursday. I'll spend the night on Thursday. I'll have Friday in the Grand Canyon. Um, and that's a very sort of powerful thing for us. And then the other thing that is not a product of COVID, but is changing, is that the demographics of young families who want to travel and retirees who want to travel are just naturally through the progression of aging are growing,
Yeah.
and are growing by millions of people. And so when you kind of take all of that and put it in a blender, it's generally kind of moving things in the right direction. And of course, every market is different, but it's pretty powerful when you put it all together.
Yeah. No, I'm laughing as you're explaining that with my own kids, just thinking they watch Home Alone and Home Alone 2 like 100 times at Christmas, and seeing
Yeah.
the plaza and a room full of presents. It's like, no, no, you just want s'mores and just an outdoor. Like you'd be a lot happier without all those presents, being alone at the Waldorf or the Plaza Hotel. So,
Exactly. Exactly. But yeah, that movie was a product of a time when maybe people were spending a little bit less on experiences.
yeah, exactly. So hopefully, budgeting wise, it'll stay more experiences.
Yeah. A win for parents, that's for sure.
Yeah,
That's for
exactly.
sure.
I want to thank you for taking the time, Ben. It's obviously good to catch up. Great to hear more kind of how this has evolved. So, no, appreciate you taking the time, and yeah, we'll be in touch.
Thanks so much, Chase. Appreciate it.
All right. Yeah.